Uh, Hello friends, this is Hatim Rampurawala, and in this video we will continue with the question number 2 of chapter 4, that is cost techniques of our revision. We had ended the earlier video till that is by completing the question number 1. Due to the heavy rainfall, it was unable to record, means there was a noise sound problem, so I stopped the video. And in this we will continue with question number 2, and there are in all 6 questions. Okay, so let's start. NEC Limited forms a committee consisting of its production, marketing and the finance director to prepare a budget for the year, and for the next year a committee submits a draft budget as detailed below. Okay, so it is a budget of selling price 50, direct cost per unit 996, contribution 26, budgeted sales 25,000. Okay, budgeted contribution 6,50,000, that is 25 multiplied by 26. Budgeted fixed cost 5 lakh, budgeted profit. Okay, the management is not happy with the budgeted profit as it is almost equal to its previous year profit. So the profit is equal to previous year, they actually wanted more. So therefore it asked the committee to prepare a budget to earn at least a profit of 3 lakh to achieve the target profit. Okay, to achieve this target profit, they asked the management to prepare the budget, asked the committee actually, sorry. To achieve the target profit, the committee reported back with the following suggestions. The unit selling price should be raised to 55, it is currently 50. Okay, the sales volume should be increased by 5,000, so it will amount to 30,000 units. To attain the above said increase in the sales, the company should spend 40,000. So for the additional sale, the company have to incur additional cost. Okay, the production time per unit should be reduced. Production time per unit, so this variable cost is 3 hours into 2, it is 6, and direct labor also hours will remain basically same, so 3 hours into 3 per unit, so 9. That 3 hours we have to reduce to win the acceptance of the worker. In this regard, the hourly rate should be increased by 3 beside an annual group bonus of 30,000. So to what we can say, motivate them to win the acceptance of the worker, we will increase the hourly rate by 3, and we will increase the bonus to 30,000 additional bonus, that is in addition to their salary, in addition to their wages, basically direct labor charges. There is no change in the amount of the rates of the other expenses. The company had sufficient production capacity as the implementation of the above proposal needs the acceptance of the workforce to increase the speed of the work and to reduce the production time per unit. Okay, to increase, for this proposal they have to increase the speed and to reduce the production time, as it is written above also, the production time should be reduced. The board wants to know the extent of the reduction in per unit production time. So board wants to know actually the how much there will be reduction in per unit time. Currently it is 3, so till what extent it will be reduced, so what will be the difference? Okay, required, calculate the target production time per unit, and the time to be reduced per unit. So we have to first find the time, and then we will calculate just the difference, that is 3 minus whatever the figure we will arrive at, so minus that we will arrive at the time to be reduced per unit. Second, identify the other problems that may rise in the production due to the decrease in the unit production time, and also suggest the remedial measures to be taken. So this is a basically theory based question, so we have to identify the other problems that may arise due to the decrease in the time, arise in the production due to the decrease in the unit production time. Okay, so and basically what the answer would have, what the suggested answer would be, that it will lead to unnecessary pressure on the management since the time has been reduced, and as such we have to frame the answer. Then state the most suitable situation for the adoption of the target costing. Okay, so which all would be the suitable situation for adopting the target costing. So we will proceed with the answer. First we have to calculate the time. So how the calculation would be done, basically we will first discuss and then see the answer. So we have to reverse calculate the entire thing. That is, first we will write the selling price, that is 50. Basically it will be 50 नहीं 55, because selling price will be increased to 55. 55 into 30,000, that is sales quantity will also increase, then sales volume will also increase. So 55,000, 55 into 25,000 will be the selling, minus the direct material cost will be 9 only, there won't be any change in 9. So 9 into 30,000, that will be the material cost. Then we will not deduct currently the labor and variable overheads, because that will be the balance answer. On that basis we can find the hours. Contribution per unit is and company wants to earn the profit of 3 lakh rupees, so we will deduct 3 lakh also. We will deduct the fixed cost as 5 lakh plus 40,000, because that said the advertisement cost will increase. So 5 lakh 40,000 we will deduct as fixed cost. So what we will get is the time the cost which is related to the direct labor and variable overheads. So how that will be calculated, that is the direct labor cost plus variable cost is equal to the amount, which I think so is 5,10,000 it is. And then what we will do is variable overheads is 2 as they had given, then direct labor currently it is 3, and rate per rate it is 3, and they had said to increase by 3, further 3 will be okay. This 30,000 will also be reduced from that, the bonus, and that unit we will the amount that is 3 the R basically. So we'll see the solution. See, first we'll go through the working note. 6,50,000 sale, 55,000 into 30,000 less target profit 30,000 less direct material, less direct material is 9 into 30,000. Budgeted fixed cost 5 lakh minus proposed advertisement 40,000, and the annual group bonus, as I said that 30,000 we have to also deduct. So in calculation all this thing will be deducted except the variable and the direct labor, which has been calculated for which we use for primary which we consider as a primary cost basically. So that will be equal to 5,10,000 for 30,000 units. Okay, now will come up 3 plus 3 plus 2 into some hours that we will that we will get as a balancing figure into 30,000 units is equal to 5,10,000, 5,10,000. So if we calculate this we will get 2.125, and the time reduced because they had asked the time to be reduced per unit is 3 minus 2.125, we get 0.875. So basically the calculation was much simpler. We had to take the sales minus the targeted profit minus all the cost plus additional cost also, like 40,000, like 30,000, we will get 5,10,000. That is for 30,000 units, and for some hours we are paying the direct labor. So 3 plus 3 plus 2 which amounts to actually 8 into 30,000, which amounts to 2,40,000, and we will divide 5,10,000 divided by 2,40,000, we will get 2.125 exact answer. So we can find out the first part like this way. Then they had said the problems. The problems are the target costing method is applicable particularly for the repetitive manufacturing. It should however be recognized that some product often bear a high degree of repetition. So what they have said is target costing method is applicable particularly for the repetitive manufacturing. Whenever there are repetitive process performed in the manufacturing industry, over there the targeting cost can be applied. It should however be recognized that some product often bear a high degree of repetitions, and that often are considerably repetitions where reduction target would come into play as a framework into an for improving the design. So for improving the design and all, the target costing comes into play. That is the reduction in the target, that we have to reduce this hours. For example, basically we are taking earlier 3 hours for something, and if we are doing that repetitively, so we will be able to do that thing in less than 3 hours in the next time, in third time, fourth time, say fifth time, we will able to do that thing in the less time. So it is applicable basically to those industry where repetitive manufacturing is done, repetitive things basically. It should however be recognized, I am reading it again, it should however be recognized that some product often bear a high degree of repetition, and that there often are considerable repetition where reduction target would come into play as a framework for improving. So it comes basically for improving the design as well. And then working under the pressure to finish a new design assignment in a short time may make development resources away from the effort to optimize or re-engineer the production process. So it will unnecessarily pressurize the department for completing the for designing assignment or to complete the process within that targeted time. If approaching the product design as an activity to be optimized independently, there is a risk that the target costing may not succeed in satisfactorily addressing overall performance. So in short, decrease in the unit production time, so the one which has been decreased from 3 to 2.125, decrease in the unit production time may lead to unwanted pressure on the design and its implementation stage. Okay, then remedial measure. As a remedial action, what they asked is they asked remedial measure as well. Okay, and also suggest the remedial measure to be taken in part 2. They have given as a remedial measure, organization should retain the strong control over the design team. So the organization should have a strong control over the design team headed by the good team leader who is handling the designing. Because over which they have to reduce their time that is being taken in the designing. This person must have an exceptional knowledge of the design process, good interpretational skill. This are the skill required for that leader. This person must have an exceptional knowledge of the design process, good interpersonal skills, and commitment to staying within both time and the cost budget for the design project. So this person has the responsibility to complete it within the given time and within the given cost budget for the design project. If the time is too short, even an organization may reject a project for a time being. Later it may try out with a new cost reduction method or a less expensive material to achieve the target cost and control overall production activity. So for instance, in a given time period, if it isn't capable for a organization to complete that assignment, so for the time being they can reject the proposal, and when the company is in position to complete it within a given time and within a given cost, so they can at that time they can accept the proposal and they can work on it. Simply they have just said the problem is that it will unnecessarily pressurize on the design and implementation stage, and remedial action is that they can currently should not proceed with the measure currently should not proceed with the design and implementation of that particular product. And then when they have the essential what we can say what word to use is resources, essential resources. When they have the resources that they can complete it within the given time and cost, at that time they can accept. We will lead this remedial measure again. As a remedial action, organization should retain a strong control over its design team. So for a remedial measure, what they have to do is maintain a strong control over its design team, which is headed by the good team leader. This person must have an exceptional knowledge of the design process and good interpersonal skill and commitment of staying within both the time and the cost budget for the design. If the time is too short, as we have seen that it is not too short, it is just reduced from 3 to 2.125. If the time is too short within a organization, even an organization may reject the proposal for the time being. Later it can try out with the new cost reduction method or a less expensive material. So new cost reduction method, how to reduce the cost, less expensive material to achieve the target cost and control the production activity. Third thing they have asked is state the most suitable situation for the adoption of the target costing. Target costing is the most useful in situation where majority of the product costs are logged in during a product design phase. This is a case for the most manufactured product, but few service. In the service area, such as consulting, the bulk of all the activities can be reconfigured for cost reduction during the production phase, which is when the service are being provided directly to the customer in the service environment. in the service environment, the designing team is still present but is more commonly concerned with streamlining the activity connected with the employee, providing these services which can continue to be enhanced at any time, not just when the initial services processes it processes is being laid out. So we will proceed with the question number 3. So this was, as they have said, most suitable situation for adoption of the target costing. So it is majorly used in the manufacturing industries, manufacturing companies. Then in service it has been used, but not much as manufacturing, because in manufacturing what it is, that the things are being repeatedly performed. Then over there the cost is being logged during the product design phase. So means they are logged in the sense it has been fixed during the product design phase. So this is the case of the most manufactured product, but the few services. So in service industry it has been used very less, this target costing thing. Okay, so the third part is also the mostly wholly theory they are given. You can read this once. uh, we will proceed with question number 3. Generation 2050 technology, 2050 technology, cutting edge innovation that are powering the next revolution in the mobility, and has 9 tablet smartphones model currently in the market, whose previous year financial data is given below. So there are 9 models of the mobile phones, smart mobile models currently in the market, whose previous year financial data, that is their sales figure, has been given, and the profit volume PV ratio required using the financial data. Carry out the Pareto analysis 80-20 of the sales and contribution. So it is like, um, we have to first, there can be two analysis in this as such. One is in relation to the sales and other in relation to the contribution. So firstly what we will do is, first we will prepare a column, that is model. Then we will write sales column in highest sales to lower sales, in ascending a manner as such, that highest to lowest as such. Then contribution to the sales, we will not write first PV thing. Contribution, we will write the percentage of the sales, then cumulative percentage. Then in next column there will be PV ratio. Then that will also be based on, we will again write the model number, because for PV model will change. For sales model, that the what we can say, the series, the word what we can use is, the series will change basically. What I am about to say is, you have to again prepare a model column. Then profit volume ratio, this you will multiply directly with the sales to find out the actual figures of the quantity, actual figure of the profit. On that highest, again set out as highest to lowest, then percentage of that profit contribution basically, and cumulative percentage. And then we have to do the analysis. So we will see the solution. See model, then sales figure they have given from highest to lowest, then percentage, then cumulative percentage, then again model for the contribution part. Then we have multiplied the contribution percentage with the sales, so we had find the contribution. On that basis we had again arranged chronologically from the highest to lowest contribution, then percentage of this total contribution, and the cumulative. This same presentation we have to do in every sum of Pareto analysis. We have to set in chronological order of the what we can say, highest to lowest of any given data in the question. Then analysis, and they're asked to prepare charts. Pareto analysis, carried the Pareto analysis. So diagrammatically shown as sales contribution, that for A01 35.05% sales, this much contribution and all. Okay, that was relates to sale. 35% sale it is, then 20% sale, 14% sale, and likewise for contribution, like A1 is contributing 8.5, B 2 is contributing 30% of the contribution. Now, recommendation. Pareto analysis is the rule that recommends focus on the most important aspect of the design making in order to simplify the process of the decision making. So it is basically for this Pareto analysis we do for decision making. The very purpose of the analysis is to direct attention of the efforts of the management to the product or the areas where the best return can be achieved by the taking appropriate action. So this analysis is done so that the management can focus on those products which give high sales or which give high contribution, and not for those who are giving very less sale. Not much management will not involve much efforts, or will not basically we can say unnecessarily waste the time on that product, but they can focus on the premium product who are giving high sales and high contribution. Pareto analysis is based on the 80-20 rule, which implies that 20% of the product account for 20% of the product account for 80% of the revenue. But this is not the fixed percentage rule. In the general business sense, it means that a few goods or the product or service customer may make up most of the value of the firm. So basically the meaning is few of the product or the few goods or few customer may make most of the value to the firm. So we have to focus on that few who gives few, we can say that 20% that gives 80% of the value to the firm. Then in the present case, whether there are two questions, discuss your findings with appropriate recommendations. So we had already started our recommendation, the second part to the question. In the present case, the 5 model, namely A1, B2, C3, D4 accounts for 80% of the sale, whereas 80% of the contribution is derived from B2, E5, C2, D4. See, first we will do our analysis, then we will read out, so you can be it will be easy. Like which products are contributing to 80% of the sales is we can see this first 4 till 82.47 till D4, and in contribution B2, E5, C3, D4, and basically we can say F6 also, because it is going till 83. Then we can also analyze that this the one A1, which is giving us sales of 35%, but it is giving contribution of only say we can say it in contribution column is of only 8.05. that is highest it is having a highest sale but a lowest contribution. Then we can compare which we can compare. See, this G7, H8, I9 are same in both the cases. Their sales is also low, the contribution is also low. Then F4 now. Then we can see over here is that E5 is giving us sales of only 7.2% of the entire sale, but its contribution is 19. We can also see that only the sales of contribution of B2 and B2 and E5 is giving 50% of the contribution of the entire contribution. 50% has been just with these two products. Okay, now we will read out the answer. In the present case, the 5 model, namely A1, B2, C3 amounts to 80%, and similarly for the contribution they have written the 4 names. And F6, the model B2 and E5 together accounts for 50% of the contribution, but having only 27% of the share in the sales. So they are giving profit of this much, but the sales share is only 27%. So these two models are the key models and should be the top priority of the management. Both C3 and D4 are amongst the model giving 80% of the contribution as well as 80% of the sales. So by combining C3 and D4, they all are giving 80% of contribution and 80% of the sales, so they can also be clubbed with B2 and E5. So B2 and E5 should be the priority, and C3 and D4 should be the priority of the model of the management. Management of the company should allocate the maximum resources to these four models. Basically, model F6 features among the model giving 80% of the contribution with relatively lower share in the sales. We can see that F6 is giving 80% of the contribution and the contribution side by adding 8% to the contribution, but its sales ratio is less, that is in only 5% contribution to sales, 5% sales, and giving 8% of the profit, amounting to total more than 80% in the sales. Then model A1 accounts to 35% of the total sales, giving only 8.05% of the share in the total contribution. Company should review its pricing structure to enhance its contribution. So if the sales is more, it has to review its pricing structures, whether it is giving more discount to the customers. So why the contribution is less? So company should review its pricing structure to enhance its contribution. Basically it can enhance, so if the sales is high, they can increase the contribution, so it will ultimately lead to higher contribution of product A. Model G7, H8 and I9 have a lower share in both the sales as well as the contribution. Company can delegate the pricing decision of these two models to the lower level of the management, thus freeing themselves to focus on the pricing decision for four models, for the key models. So thus freeing themselves to focus on the pricing decisions for key models. So they would be only focusing on the key models, and company can delegate the pricing decision of this model to the lower level of the management. So the top management won't take decision basically for this low contribution, low sales product, but they can delegate it to the lower level management. Okay, well, now we will proceed to question number 4. Question number 4 is also basically a much simpler question. See, life cycle costing. P&G International has developed a new product A3 which is about 26 minutes. My goodness, 2 question only took this much time. P&G International has developed a new product Alpha 3 which is about to be bought a machine which is about to launch into the market. The company has spent 30 lakh rupees on the R&D of the product Alpha 3. It has also bought a machine to produce a product Alpha 3 costing 11,25,000 with a capacity of producing 1,100 units per week. Okay, the machine has no residual value. The company, so it has bought the machinery for 11,25,000 basically, and the company has spent research also 30 lakh rupees for this Alpha 3 product. The company has decided to charge the price that will change with the cumulative numbers of the units sold. So for the cumulative figure from 0 to 2200 units sold, the price will be 750. For 2200 to 7700, it will be 600. 7700 to 15950, it will be 525. Then 15951 to 59,950, it will be 450, and accordingly more than 559, 951, it will be 300. So we can see the price is gradually going on reducing the more units being sold. Then based on this selling price, it is expected that the sales demand will be shown below. Sales demand, this is basically the sales demand based on week. So from 1 to 10 week, the sales demand is 220 unit per week. 11 to 20th week, it is 550. So it is the sales demand is increasing because from introduction stage they will go to growth stage, then maturity stage, and then it will decline basically. So 21 to 30, it is 825. 31 to 70, earlier they have given a break, that is what we can say, a range of just 10 from 0 to 10, 1 to 10, 11 to 20, 21 to 30. Now it is a range of 40 basically. 31 to 70, it is 1100. Then there is a reduction in the sales from 1100 to 880, from 71st week to 80. 81 to 90, there is again reduction. Then 91 to 100, again reduction. 100 101 to 110, again reduction to 20 unit per week. Thereafter there will be nil. Then the unit variable cost for first 2200 unit is 375. Next 13,750. So this 13,750 may contain basically we can say that, see, first 2200 how it came is from, we can see from 1 to 10 week it is 220 220 production. So 220 into 10 weeks, so 220 into 10 is 2200. Then you multiply the 5500, no sorry 550 with again 10 from 11 to 20, it amounts to 5500. And 825 into 10, because from 21 to 30 it is 10 week, so add up 5500 and 8250, it amounts to 13750. So combining this two stages to this 2 weeks, that is from 11 to 20 and 21 to 30, when the sales demand has been what we can say decreasing, this quantity, the cost is same for them. So for both the 10 period week, the cost is 300. Then for the next 22,000, basically it is 225, and for the next 22,000 it is 180. So it is, cost is also reducing because of the learning curve effect, because of the supplier is providing at a lower cost, economy of the scale, and all. Because of all these factors, the cost is reducing. But after a certain period, that is after 22,000, next 22,000, it is increasing. So means now the declining stage has started, for because they had to incur the cost for the advertisement, for sales promotion, for their, for to sell their remaining stock. So that this could be a indication of the declining stage. This is also an indication of declining stage, that from 71st stage to a 71st stage, the sales is being reducing from 1100 to 880. So so demand is been reducing actually. So this is also indication of declining stage. Okay. PGIL uses the just in time production system following in the total contribution statement of the product alpha 3, its for its introduction and the stage growth. Introduction stage weeks, basically from 1 to 10. Okay, this data they have given: introduction and growth, introduction 1 to 10, 11 to 30, as I said, 11 to 20, 20 to 30. The unit quantity they have given, selling price, variable cost, contribution, and the total contribution. Now what they have asked to us is, prepare the total contribution statement for each of the remaining two stages of the product life cycle. So we have to prepare the what we can say, the remaining two stage of life cycle, means we have to add in this. Basically after growth we have to prepare the maturity stage for the same, in the same manner as such, and basically continue with the table, and the maturity declining stage, and discuss the pricing strategy for product alpha, how it should be priced, the skimming pricing, penetration pricing, how to recover the cost as such. Find the possible reason for the change in the cost during the life cycle of the product. So why it is why the price is being changing. So this reduction in the price, then reduction in the cost, then suddenly it got increased. This we have to discuss the changes in the cost, sorry, basically cost, not revenue, cost. So this thing, this table basically to discuss, sorry, during the life cycle of the product alpha. Okay, so we will proceed with. So first step which we have to do is prepare the working note for the entire cumulative working of all the three tables, that is the cost also, the quantity demanded also, and the sell also, so that we can know at what selling price, what quantity, what is the selling price, what is the cost, what is the profit. So for that we will prepare first the working note. On that basis then we can simply prepare, in addition to the growth, the the table for the maturity, the column for the maturity, and the column for the, what we can say, declining stage. Okay, so we'll see the working note, how it has been prepared. So see, it has been prepared in same manner. We have just prepared the maturity stage and the decline stage, but for that we need to have the working note prepared. So this weeks, this all data we had combined of all three tables given above. Weeks, demand per weeks, so 220, 550, 85. Then we had separated this from 31st week to 70, it was given in one, but then because of the change in the cost, see in last variable column there is a change in cost from 225 unit to 188. So because of that we had to separate that two columns. So 31,000 31 no, 31 to 50, 51 week to 70, 71 week to 80, and basically okay, it is being continued. 81 to 90, 91 to 100, 110 to this. We will prepare this entire working. It is much simpler. Just write down the quantity demanded as it is, then sales, it is sale quantity. So 220 into 10, 550 into 10, 825 into 10, 1100 into 20, because it is 20 week period. So likewise you will prepare the sales quantity also, then cumulative sales. So how much was the total cumulative sales, then selling price based on the various quantity as they are given in the question, and the variable cost. On the basis of this we will simply prepare this. It was the next 22,000 and the next 22,000 were the maturity of that. The selling price is 450. We can see over here in the question. For the next it is, see till 525 it is done, 8,500. Then after that it will fall into 450 units, 450 price, and then 300. So selling price 450, 450, and declining stage selling price will be 300. Unit variable cost 225, 188, and 225. Once you will go through the below table, and then you can easily prepare this. Unit contribution is selling price minus variable cost, and the total contribution we had just simply multiplied the contribution with the number of the units, so we'll get the unit contribution. So second part, pricing strategy for the product. The PGIL is following the skimming pricing strategy. How we can say it is skimming? It is following skimming pricing is because in the early stage when it is earlier it is selling from 0 to 22,000 units, it is selling at 750, then it is reducing, then it is, so initially they are charging high and then they are going on reducing the cost. So they are following the skimming pricing. Where I went, okay, here it is. PGIL is following the skimming pricing strategy. That's why it is planned to launch the product alpha initially at a high price. A skimming pricing strategy may be recommended when the firm had incurred a large sum of the large sum of money on the research and the development of the new product. In the problem, the PGIL has incurred a huge amount on the research and the development, because in the initially only they have said that 30 lakh rupees they have incurred in the production. So the firm will basically adopt a skimming pricing strategy. In the problem, PGIL has incurred a huge amount of the research and development. Also, it is very difficult to start with a low price and then rise the price. So if we start with low, and then it will be difficult for people to adopt, or people to accept, basically accept what is proper, accept the higher price being charged by the company. Rising a lower price may annoy a potential customer. Then pricing of the product alpha is decreasing gradually, as we had seen, from 750 to 600 approx, then 525, then 450, then 300. So this is happening because the PGL wants to tap the mass market by lowering the price. So they are initially charge the higher price to recover all the costs. So it is a skimming pricing strategy, then it is going on gradually reducing. So this indicates that it is capturing the market, mass market, by lowering the price. Okay. Third, possible reason for the change in the cost during the life cycle. Change in cost of the life cycle of the product alpha. Product life cycle costing involve the tracing of the cost and revenue of each of the product over the several calendar periods throughout their entire life. Possible reason for the change in the cost during the life cycle of the product are as follows. So these are the possible changes. PGIL is expecting PGIL is where it was given. Okay, PGIL is expecting the reduction in the unit cost of the product alpha over the life of the product as a consequence of economy of the scale and learning curve experience. Learning effect may be possible, may be the possible reason for the reduction in the learning curve effect, may be the possible reason for the reduction in the price per unit cost in the processes in the labor intensive. Then when a new product or the process is started, the performance of the worker is not at its best and the learning curve phenomena take place as an experience is gained. So this whole thing has been given on the learning curve. So I will just read. As an experience is gained, the performance of the worker improves. Performance improves and the time taken per unit reduces, and thus this productivity goes up. The amount of the improvement and the experience gained is reflected in the decrease in the cost. So the amount of experience which they have gained while doing this specific task and the experience gained will be reflected by reduction in the hours consumed and gradually the decrease in the cost. By decrease in the cost, it will gradually, what we can say, reflect that the learning curve effect has taken place. Then till the stage of the maturity, PGIL is in the expansion mode. So till maturity it is in expansion mode. The PGL may be able to take advantage of the quantity discount offered by the supplier or may negotiate the price with the supplier. So until maturity stage it is expanding, as we can see in here also, where over here, see, till 70th week it is in maturity stage. It is in maturity stage. So till that period it is going on increasing, because the sales demand is being continuously being increased. So what the company will do, ask for the discount from the supplier, as they would be buying in bulk quantity for the economy of the scale, for enjoying the benefit of economy of scale. Okay, till the stage of maturity, PGL is in an expansion mode. PGL may able to take the advantage of the quantity discount offered by the supplier or may negotiate the price with the supplier. Product alpha 3 has the least variable cost, that is 188 in the last phase of the maturity. This is because the product which is in the maturity stage may require less marketing support than the product at the growth stage. So from introduction stage it will incur the cost, then in growth stage it will incur a little less, then in maturity it will again incur less because of the less marketing and all. And this is because the product which is in matured state would require a less marketing support than the product which is in growth stage. So there is a saving in the marketing cost per unit. Again, the cost of the product alpha jumps, so from 188 it jumps to 225 in a declining stage. As soon as the product reaches this declining stage, the need of the demand of the product disappears. So the need disappears, so it reaches the declining stage. For selling the product, and the quantity discount may not be available. So now quantity discount will not be available. So for selling the product it has to incur the marketing expenses also. Even the PGL may have to incur the heavy marketing expenses for the stock clearance. So thereby it may increase the price, which has been clearly seen. From 188 it has been increased to 225. And by this we are done with our question number, what we can say, fourth also. Now we would be doing question number 5th. Okay, let's read. So for question number 5th, actually we should have the knowledge of the concept of product life cycle. See over here, I will take you to the theory part. The entire box structure they are given. Where it is here? Yeah, it is here. See, this thing I am talking about, life cycle costing. This is introduction stage. See, for stage 1, introduction stage. So introduction stage have the specific characteristics also, and is having the strategies and the strategies as well. So what all are the characteristics of the introduction stage? So just try to remember, or actually we have to mug up only. See, the decision about the product branding, but it is logical decision. Characteristics, decision about the product branding and packaging and labeling. So this is the characteristics. Then high distribution and the promotional expenses, they would be incurring high distribution and promotional expenses, because in the initial stage it would be incurring distribution and promotional. Then profits are low or the negative due to the low initial volume. So initially the product profit will be less, low initial or negative due to the low initial volume. Then pricing may be low penetration or the high skimming pricing. So price may be either low penetration or the high skimming pricing. This is the characteristics of introduction. Then huge effort to attract various marketing channels. Okay, because in the initial stage they have to incur cost on marketing, so huge effort to attract the various market channel. Then aggressive promotional effort to increase the awareness. So to increase the awareness, there would be an aggressive promotional expenses to increase awareness. Then product refinement are not possible. Few competitors product basic version of the product. Focus on those buyer are most ready to buy. Focus on those buyers. Then what will be the strategy? Attracting the customer with rising awareness of the product through the promotion activity. So attracting the customer, this is a strategy adopted at the introduction stage. Inducing the customer to try and buy the product. Strengthening or expanding the channel and chain and supply chain relationship. Building on the availability of the visibility of the product that boost the channel intermediaries to support. You just also go through this once. And setting price in the alignment with the competitive reality of the market. Likewise, similarly, they have given for growth is high volume and increase in competition. So high in growth rate there will be high volume characteristics. Then increase in the sales and increase in rate in early growth. Then new channel to handle additional volume and new market. Shift of emphasis of the product awareness. So it is an shift from the emphasis of product. Earlier it was product awareness, then to product conviction. Then overall strategy of for the trade-off between the high products and the high market share. In then it is improving and adding the feature or the strategy or the strategic lowering the price to attract the buyer. So it is like improving or adding features. From introduction stage we will add some more features, and the growth stage, so there will be growth, or lowering a little price to attract more buyers. Then some promotional spending or slightly higher. Educating market in is main goal. So in growth stage what we will do is educate a market so that they can purchase the product. Then length of the growth stage varies according to the nature of the product and competitive reaction. It varies due to the product and competitive reaction. What will be the strategies in the growth stage? Establish a clear brand identity through the promotional campaign. So proper brand will be recognized. So brand will be given a proper recognition. Establish a clear brand identity through promotional campaign. Maintain the control over the product quality to assure the customer satisfaction. So for the customer satisfaction, what we will do is maintain the control over the product quality. Maximize the availability of the product through the strong distribution channel. So in the growth stage there will be huge demand, so we will the company have to maximize the availability of the product through strong distribution channel. So they have to engage into many distribution channels basically. Find the ideal balance between the price and the demand as per the price elasticity. Overall strategy shift from the acquisition to retention of the customer, from motivating the product trial to generating the repeat purchase and building the brand loyalty. Development of the long-term relationship with the customer and partners for maturity stage. So developing long-term relationship with the customer and the partners. Value-based pricing may be considered. Leverage the product perceived differential advantage to secure the pricing. So what we will do is you just read this thing, and basically I think just go through the fifth question as well. There is no need for explanation for the fifth question, or else I will see. Wait a second. Or else we can just discuss the fifth question. Best thing would be that. Okay. So let's come to the question only. You just read the maturity thing also and declining categories and strategies. So because it will be useful for the answer, the same pointers they have been they have used for what we can say in the question. Okay. This initial for fifth question. The initial para is just introductory. We have to just assign which whether it is a strategy or the characteristics first thing, and of which strategy or the characteristics of which part X as such of the entire life cycle, that is of introduction, growth, maturity, or the declining. So first we will read overcapacity in the industry. So it is, if it is an overcapacity, so it is a growth stage. No, it is maturity stage, and it is a characteristics. See, strategy you can easily identify this is a strategy, and if there is nothing intention in that, so it will be a characteristics. So overcapacity in the industry, basically it is a characteristics, and of which it is the characteristics, it is of maturity. Okay, the company can continue to offer the product to the loyal customer at a reduced price. So this is the strategy basically, because it is offering the product to the customer at the lower price, and it is what we can say, which stage it can be, it is a declining stage because the companies continue to offer the product to the loyal customer at reduced price. The word reduced price itself indicate that it is a declining stage. Then third one, few competitors produce basic version of the product. So few competitors produce basic version, this is a characteristics, and of which stage it is introduction, because it is just introducing the product. So basic version of the product, it is an introduction stage. Then product feature may be improved or enhanced to differentiate or product from that of the competitor. So this is a strategy basically. And of maturity stage, the product may be featured. Then attracting the customer by raising the awareness. So awareness word means this is the introductory stage, and it is an attracting the awareness. So this is a strategy, strategy of introduction. Then high volume of the business. So high volume means the growth, high volume of the business and increase in the competition. Increase in competition also indicate that it is a growth stage. And this is the strategy basically, no, sorry, characteristics. Then use of the present product as a replacement product for launching another product successful in the market. So this is first of all declining stage because it is replacing the product for launching another product, and it is a strategy. Then value based pricing strategy, value based, so it is a growth basically. Value based pricing strategy may be considered, and it is a it is a strategy. Value based pricing strategy, the word strategy itself indicates it is a strategy. Then product started declining, at times become negative, declining stage, and it is a characteristics, characteristics of declining. Maintain control over the product quality to assure the customer satisfaction. Customer satisfaction is growth. So, and it is a strategy for me because it is maintaining the quality, to how to maintain. So it is strategy basically, not a characteristics. Strengthening or expanding the channel and supply chain management. So strengthening and expanding, so it is an introduction because from introduction stage basically we expand, we try to expand ourselves and strengthen ourselves. So strengthening and expanding, it is a strategy of introduction stage. And price may have to be reduced to attract the price sensitive customer. So it is a strategy of maturity. So what they have given is the time the items are required to be tabulated as in the given below. Required, we have to present the answer in this tabular form. See the answer how they have given is characteristics and the strategy. This table they have prepared only characteristics and strategy, but only we have to write the numbers that which point relates to category and strategy of which specifically introduction or growth. So you can basically complete this thing, fill this number based on the concepts which we have discussed. Then they have said second thing is list down the importance of any of the four product life cycle costing. So we have to just discuss the importance of product life cycle costing. So importance of the product life cycle costing, as the it act as a, first of all, it act as a planning tool for for marketing the challenges in each of the stage, and possesses major alternative character strategies, that is application of the Kaizen. So it is acting as a planning tool, then it is acting as a so importance, that is as a control tool. Product life cycle is it act as a control tool. The product life cycle concept allows the company to measure the product performance against the similar product launches in the past. As the forecasting tool, it then it act as a forecasting tool as well. It is very important because sales histories exhibit diverse pattern of the diverse pattern at the stages vary in duration, and it lead to appropriate strategy formulation depending on the stages of the product life cycle. And they are asked for the benefit as well, so you can read this benefit, because basically we have to memorize this thing. So memorize this second point also and third point also, the what we can say, the benefits. We will move on to question number 6th. This is a basic and simple question, and the last question as such of this chapter. A fertilizer company produces a grade A and grade B fertilizer. 1 kilogram of the grade A fertilizer sell 280 per kg, and 1 kilogram of grade B fertilizer sell for 400. So grade A sell for 280, grade B sell for 400. The product passes through the three cost center, that is C1, C2, C3 during the manufacturing process. The direct material cost per kilogram for the fertilizer is 300. So direct kg material is 300, and the direct labor is 200. Allocation between the cost center is given. The allocation between the cost center is given below. Okay, so we can see in this total column 300 and 200 for the direct material and direct labor. They have bifurcated into three cost center, C1, C2, C3, and there has been and this has to be allocated under grade A and grade B based on the percentage given. So if we see for material, so of that 90, 30% is of grade A, and of that 90, 70% is of grade B. Similarly, of direct labor, 30% of the C1, that is 30% of the direct labor of 60 rupees relates to grade A, and 70% relates to grade B of 60%. So just do this calculation and we can find out what is exactly the cost of the material for grade A and what is the cost of the labor of grade A and B. So for grade A and B we have to find out the material cost, and grade grade A and B we have to find out the labor cost as well. Okay, all the expenses considered to be overhead per kilogram of the fertilizer produced is 1,50,000. All the expenses considered to be overhead per kilogram of fertilizer produced is 150. This is located equally between the grade A and grade B fertilizer. Then so see, all the expenses considered to be overhead. This 150 is in addition to the material and labor. This 150 is also been divided into in equal parts, in equal amount actually, and allocated to grade A and grade B. Pricing decision for the fertilizer is made based on the overall is based on the above cost allocation. Okay, the above cost allocation for labor and material and the equal allocation for that 150. The management accountant of the company had recently came across the concept of the environment management accounting. The pricing of the product should also factor in the environment cost generated by each of the product. An analysis of the overhead expenses revealed that the total cost of 150 kilograms. So this environment overhead so the pricing of the product should be factored in the environment cost also. So environment cost should also be factored in each of the product. An analysis of the overhead expenses revealed that the total cost of 150 per kilogram of the fertilizer produced indicates incinerator cost of 90 per kilogram of fertilizer produced, so that 150 will be bifurcated further between that is 90 plus 60. So how to deal with that 90? The incinerator is used to dispose the solid waste produced during the manufacturing process. The below is the cost center and the product wise information of the solid waste. So how this waste is being allocated, that to grade A and to grade B based on the cost center. So basically we can directly divide that 90 into these two parts, that is 6 plus 9. So this will form a ratio. So what we will do is 6 plus 9 is 15. So you directly take 90 into 6 by 15 and into 9 by 15. So we can allocate that to grade A and grade B based on the based on the impact. Each cost has to be each cost on the environment, and the management would like to revise the cost allocation. So earlier they had done directly by dividing into two equal parts, that is equal parts, or we can say directly half they have done of that 150, that is 75. But actually for that of that 150 and of that 150, the cost of 90 has to be divided in this ratio, that is 6 by 9, and the remaining that is 16. See, they are given the remaining overheads expenses of 60 kilogram of the fertilizer can be allocated equally. So remaining can be allocated equally, that is 30. But for 90 we have to allocate in this ratio. Then required, calculate the product wise profitability based on the original cost allocation, original cost. Recalculate the product wise profitability based on the activity based costing methodology, environment and management accounting. The calculation is much simpler. You can refer the calculation. See, the grade A selling price was 280 and grade B was 240 400, as they were mentioned in the question. Direct material, as I said, for direct material what you do is just calculate percentage wise and get the cost of the direct material for grade A and grade B. So it was 114, 186. It is given in they are given refer table 1 also. So in table 1 also they have given the same calculation. For reference purpose, if you want to see how they have divided, you can refer that thing. But basically it is simple. So actually you don't have to see also that thing, you can directly do this on calculator as well. But in exam we have to prepare this as a working note. Okay, then labor 76, 124. Overhead, earlier they had divided 150 into half equal, that is 75. So we got a total expenses and the profit was 15, and the percentage of the profitability, that is 15 divided by 280 and 15 divided by 400, that is profit by selling price. So it was earlier was 5.36% profit and 3.75% profit. See this table allocation, how they are divided. Material C1 C2 into grade A, grade B. This is much they have complicated the calculation. You can do in simpler table as well, as you would prefer easy. Then I don't think we had to read this box thing, let it be, we can skip this thing. Accordingly the revised product profitability. So the revised one, which they have bifurcated 150 into 90 by 60 and all. So how to calculate? Selling price will be same, material and labor calculation will be same based on that calculation above. Overhead will be 66 and 84. So see how this came is 66. Refer table 2. As I said, what you do is multiply 90. As I said, see, take the calculator, multiply 90 into 6 by 15. What you get is 36, and in that add 30 because of the remaining 60 which has been allocated equally. So you get 66, and now deduct this 66 from the entire 150. You will get 84. Sorry, you will get 84. So same they have done, did 66 and 84. So profit will be 24.6 and profitability will be based on the selling price will be 8.57 and 1.5. see, so we can see the difference variance, that earlier it was 5 and the grade B was 3.75, and now from 5 of grade A it has been increased to 8.57. So means if we do a proper environmental based cost allocation, so the actual gain, that is profitability of A is more, that is 8.75, and the grade B is less. So means basically the grade B is incurring more expenses towards the environmental cost. They are incurring more, so their profit has accordingly decreased to 1.5%. Okay, this we can skip. This is the entire calculation. Again the same thing they have given, and we are done actually with this. So the table preparation is then done. The other all boxes are working note. The main table is this one for the revised one, and the earlier this one is the important one for the answer specifically. What they have asked in this theory is analyze the difference in the product profitability as per both the methods. So we have to identify the difference. So what they have given, as summarized above, originally the profit generated from the grade A and grade B was product was 15 per kilogram. Earlier it was 15 per rupees profit was there for both. Grade A was more profitable. Product, giving return of 5.36 compared to grade B of 3.75. Okay, this has been calculated by allocating the overheads equally. So this was the earlier one calculation by allocating overhead cost equally. Now during this year 15 ton of the waste is produced during the manufacturing. The grade B fertilizer produces more waste, so grade B was producing more waste, that accounts for 60% of the waste. Therefore grade B should bear the higher amount of the incinerator cost compared to grade A. That's why in the revised table the grade B profitability has reduced and grade A profitability has increased from the past pre-calculation. Then allocation of based on this premise dramatically changes the profitability of the product as calculated above. Grade A fertilizer reduces due to the lower incinerator cost allocation, generates a profit of 24. So from 15 it rises to 24. Grade B profit accordingly lowers, it reduces to 8 actually. How much it is? It reduces to 6. So profit has been reduced from 15 to 6 basically. Since the product generate more waste and has bear a larger share of the cleanups, this grade B has bear a larger share of the cleanup expenses, profitability of the grade A and grade A increases to 8.57 while grade B falls to 1.5, as we can see in the working note also, because it has increased to 8.5 and B has decreased to 1.5. Now so this has been done with the explanation part. So we have just explained the calculation which we had done, and recommend the key takeaway from the company to undertake the above analysis of the overhead cost and the pricing as per the environmental management accounting. So how this will be done, that to maintain the same level of the profitability, the company can draw the number of the conclusions from the analysis of the overhead cost as per the environment management accounting. This analysis has helped the company reach the conclusion that grade B fertilizer produces more waste. So by doing this environmental calculation, the company has reached to the conclusion that grade B is incurring more waste. Actually the company could adopt either the following approach. First, to maintain the same level of profitability, the company can increase the selling price of the grade B by either 9 per kilogram. This is 2.25% increase in the sales price of the grade B fertilizer. So what they can do is, for increasing the profitability, they can increase the selling price by 9 per kilogram. Depending on the market for this grade fertilizer, the company has to decide whether to increase the price of the product, while a price increase may possible if the company has a strong market hold. So they have to think that they had earlier said to increase the price, but the price increase can only take place when they have the control over the market, they have the hold over the market. It might be difficult for the if the competition of the market is high. So this price increased is increasing the price is difficult when competition is high. So the another thing, alternative the company can adopt is the decrease in the cost, increase in sales or decrease in cost. So how they can decrease the cost is by availing the discount from the supplier, asking for the discount from the supplier. So the same thing they have given. The other approach, a more suitable sustainable approach that is aimed of environment management accounting would be to reduce the waste produced in the manufacturing processes. This analysis has quantified the to reduce the waste. This analysis has quantified the waste generated in the product. Better manufacturing technique. So how we can reduce the cost is, that is quantify the waste generated. First identify how much waste is generated in the process. Better manufacturing. So for that matter, the company should adopt the better manufacturing techniques that could save the company incinerator cost. So how the cost, why the cost has been arrived, why the cost has been why quantify the waste, sorry, no, not cost, quantify the waste. Then company should adopt the better manufacturing technique so that the company could save the incinerator cost. This would yield a better profit to the company. So either by reducing this cost, reducing this waste of the incinerator cost, it would reduce the incinerator cost and will gradually increase in profit. And the first alternative was increasing the sales price, but that could be only possible if the company has a market hold. So with this we complete our chapter number 4, fourth revision. We are done with all illustrations and test your knowledge. This took around 1 hour 10 minutes and the earlier video was approx 40 minutes approx. So in all, chapter 4 is done in 1 hour 50 minutes. Okay, that is okay, but okay, thank you for watching.